When seekers of wisdom sought answers, they turned to the oracle. Today, in our quest to understand the economy, I, Stellah Swakei, come to you as a guide through the vast sea of information. Together, let us go through the fixed income and macroeconomic review for the first quarter of 2024. In a nutshell, 2024 started off on a positive note with so much activity happening in the month of February and March. The key highlights, however, are number one, the Eurobond buyback, which unleashed a raft of positive shoots in the economy, including but not limited to the sudden and steady appreciation of the shilling against the dollar. Talking of the shilling, the significant volatility mirrors a lot of what was happening in late 2011 and early 2012. Most of you, however, have tried to make sense of the phenomenon, but worry no more, your analyst got you covered. Now, the shilling started off the year on a free fall, factoring in the dollar demand and supply mismatch that followed the interest payments on Eurobonds in the month of December. Later on in mid-January, we received financing from the IMF and more financing from the Trade Development Bank as well as the African Development Bank. The loans boosted the supply of dollars in the economy and the shilling started appreciating against the dollar at a slower pace. Shortly after, at the start of February, the government through the central bank issued an infrastructure bond, which both local and foreign investors consider very attractive due to the tax-free nature of the papers. In addition, due to the existing interest rate environment at the time, the bond was guaranteed to elicit a lot of interest. It is also within the same period that the CBK's Monetary Policy Committee decided to raise the central bank rate by 50 basis points to 13%. The same week, the government through the National Treasury announced that it was going to fulfill its earlier promise and buy back part of the 2024 Eurobond. However, this was conditional on the success of the issuance of a new Eurobond, which to our surprise performed really well, and so did the infrastructure bond. The sequence of activity elicited positive sentiment in the economy, which resulted to a steady appreciation of the shilling against major currencies, including regional currencies. The appreciation also provoked panic selling as dollar holders tried to avoid losses. Now, in anticipation of significant financing from the World Bank as well as the IMF, we consider the sustained appreciation of the shilling a phenomenon of behavioral economics as uncertainty on where the shilling will find its equilibrium persists. That aside, average inflation for the first quarter of 2024 came in at 6.3%, and this was lower than the 6.8% recorded in Q4 of 2023 and 9.1% recorded in Q1 of 2023. The performance was mainly on the back of slower growth in food prices as well as transport prices. Fuel prices played a major role in the decline, but we still observe that price levels remain elevated compared to the prices in the previous year. On the other hand, the private sector experienced some reprieve with a stronger currency as well as lower fuel prices, which meant lower input costs. On the fixed income front, government securities continued to offer pockets of value, with short-term papers getting more demand than long-term papers. Rates on all treasury bills made it past 16.5%, but have started to decline, albeit at a slower pace. In the primary bond market, the February infrastructure bond single-handedly raised 241 billion Kenyan shillings for the government and recorded record high activity in the secondary market. To finish off, we note that the government is keen on pushing down rates on government securities by rejecting expensive bids as well as focusing more on external financing. For much and more, grab a copy of our quarterly report as well as our 2024 Investor Handbook to see our highlights and expectations for the year 2024.